So if you've ever failed a prop firm challenge, I need you to listen up. I want you to hear this loud and clear. Most traders do not fail because they are bad at trading. Not at all. They fail because the entire prop firm environment is, well, it's a meat grinder. It's almost perfectly designed to find every single tiny crack in your risk management, every weakness in your psychology, and it does it fast. Let's just start by looking at the numbers, because honestly, they tell a pretty brutal story.
And here it is. This is the reality. The numbers show that fewer than 4%, let that sink in, fewer than 4% of traders who even try a prop firm challenge ever get a payout. That's an absolutely staggering number. We're talking about a 96% failure rate. And look, that's not an accident. That is a feature of the system, not a bug.
So that brings us to the big question, right? Why are so many traders, even really skilled ones, failing at this rate? Well, it's not just one thing. It's really a perfect storm of a deceptive business model, a bunch of hidden rule traps, and, this is the big one, your own psychology working against you. So let's break down each part.
First things first, we have to talk about the prop trading illusion. The whole problem really starts with this fundamental misunderstanding of what a prop firm account actually is. And honestly, it's all thanks to some very, very clever marketing that just preys on that desire we all have for a shortcut to the big leagues.
And this slide right here just lays it all out. The promise, the big shiny lure, is this huge, life-changing account. But what's the reality? You're actually just trading a tiny, tiny drawdown limit. They promise you this shortcut to getting rich, but what they're really selling you is a brutal test of your discipline, and you have to do it inside this very, very strict little box of rules.
So here's the crucial point. Prop trading adds this whole new layer of complexity that most people don't see coming. You're not just trying to read the market, buy low, sell high. You're trying to do that while also tiptoeing around this rigid set of rules that are, frankly, designed to make you fail. Your first job isn't making a profit, it's just compliance. You could be the best market analyst on the planet, but if you break one little rule, you're out. It's that simple.
And that leads us right into the system's hidden traps. Because once you actually understand the business model, you realize these aren't just random rules. No, they are structural traps that are literally built into the product itself.
This is the key. You gotta get this. People think prop firms are like these mini hedge funds looking for the next superstar trader. They're not. They are tech companies. And their main product isn't funding traders, it's selling you the evaluation. Think about it. Their money comes from you paying for the evaluation and paying for resets. That means they are financially incentivized for you to fail and try again and again.
And what's their number one weapon in this whole game? It's this right here, the trailing drawdown. This is, without a doubt, the single biggest technical reason that traders fail. It's this nasty little rule where your loss limit follows your profits up, but it never, ever comes back down. It's like a ceiling that just gets lower and lower, squeezing you.
Just look at how this plays out. It's crazy. You have a great day, you make a solid $2,000 in profit, awesome, right? Nope, wrong. Your drawdown limit just moved up by that same $2,000. So now you take one single normal loss, say $1,500. You're still profitable on the account overall, but you are now dangerously close to blowing the whole challenge. It's a total psychological nightmare.
And oh, it doesn't stop there. Did you know you could be disqualified for trading during a big news event? Or that some of these firms have what they call consistency rules that actually punish you for having one amazing day? I mean, you can be a profitable trader, doing everything right by the market, and still fail just because you broke some little rule that was buried in the fine print. But the system's traps, they're only half the story. The other, and honestly more dangerous half, is what's going on inside your own head. Because under the pressure of all these rules, your brain becomes your absolute biggest enemy.
This slide shows what I call the lotto ticket fallacy perfectly. You pay this tiny fee, maybe $50, for this massive advertised account of $100,000. But the only number that really truly matters is your actual risk capital. That tiny little drawdown buffer, maybe $2,500, that huge gap you see between the advertised account and your real risk, that's where traders lose their minds. It's because you think you have a $100,000 account, right? So what do? You trade with a size that feels right for that. But you don't have that. You have a $2,500 account. One oversized trade can happen in seconds, and your challenge is completely over before you even knew what hit you.
And this pressure cooker environment, it just amplifies every bad emotional habit we all have as traders. You know what I'm talking about. A small loss triggers that urge for revenge trading. A flat day leads to overtrading just to feel like you're doing something. Fear makes you move your stops. Greed makes you double down after a big win. Your entire nervous system is just in overdrive. And your logical trading plan? Yeah, that goes right out the window.
And this is a really harsh truth, but it's so important. In this kind of environment, a vague idea of what you want to do is completely useless. If your rules for entry, for exit, for risk, if they're not physically written down where you can see them, they just don't exist when the pressure hits. You're not trading a plan. You're just improvising based on fear and greed.
Now here's something that almost everyone overlooks. I call it invisible sabotage. Think of it this way. Your trading strategy is the software, but your body is the hardware that it runs on. And if the hardware is compromised, guess what? The best software in the entire world is going to crash.
Just think about this simple acronym, H.A.L.T. Are you trading while you're hungry, angry, lonely, or tired? Each one of those states is chemically depleting your willpower and your impulse control. If you're tired from a bad night's sleep or you're angry after an argument, you are biologically primed to break your own rules. It's not a character weakness, it's just physiology.
Okay, so we've seen the traps, we've seen the psychological triggers. I know it sounds pretty bleak, but it's not hopeless, I promise. And that brings us to the final and most important part, the survivor's playbook. This is how you actually navigate the meat grinder.
These 5 rules are basically your shield. It's pretty simple. 1. Reframe your account size. You have a small account, so you have to use small position sizes. 2. Shift your goal. Stop trying to pass fast. Just try not to break the rules. Survival is the goal. 3. Write everything down. Your plan needs to be real. 4. Audit yourself before you ever audit the market. If you're not okay, you don't trade. Period. And finally, number 5, mute the gurus. Seriously. Most of them are just affiliates who get paid when you fail and buy a reset.
So I'll just leave you with this one question to think about. The entire prop trading game really comes down to how you answer this. The traders who treat it like a sprint, just trying to pass the test, they almost always fail. The ones who treat it like a marathon, the ones who are focused on just lasting for the long haul, they're the tiny few who actually make it. So the choice really is yours.